Alright, this is Ubaid on behalf of V Electronics, and in this video we're going to talk about loophole mining. Okay, so this is loophole mining. Now, when it comes to loophole mining, this has to do with looking for loopholes in the system and taking advantage of those loopholes. All right, so loopholes are technically gaps or shortcomings. Okay, so say for example, in the case of an inflation, okay, the banks would look for loopholes where they could basically give out gifts rather than pay higher interest to people who deposit money in their savings account. Okay, so this would be an example of loophole mining. Okay, so pay gifts rather than interest. Okay, to cover inflationary gap. All right, another example of loophole mining, and this one has to do with financiers. Okay, people who finance money will look for alternative to banking back in the days. Okay, this one has to do with money market mutual funds. Okay, so this is money market mutual funds. And these funds basically deal with low risk and highly liquid, okay, bonds and securities. Okay, so government bonds, for example, okay, treasury bonds, so on and so forth. Okay, so this is low risk and highly liquid. Bonds. These bonds usually do not change when it comes to their payout capabilities. Okay, when it comes to their payout capabilities. Okay, when it comes to inflation. Okay, so if there is an inflation, people can rely on these bonds to receive a certain amount of money in terms of payment. Okay, in terms of return. Okay, so if you were to invest $1,000, for example, and the rate of return on that $1,000 was, let's say, 20%, okay, you would receive 20% even in the case of an inflation. Okay, so this has to do with liquidity and cash flow, okay, along with high return in terms of inflation. So apart from money market mutual funds, okay, the banks also started bringing in sweep accounts. Okay, so this is sweep accounts. And what exactly are sweep accounts? So sweep accounts are accounts where the banks would deposit money overnight, earn interest on that deposit, or basically lend money overnight rather, okay, earn interest on that money, okay, and credit that interest in a savings account, okay, the next morning. Okay, so they would earn interest income, and they would use that interest income to cover any gaps and any inflationary gaps they might have when it comes to savings account the next morning. Okay, so this is sweep accounts. Okay, so accounts used to cover inflationary gaps. All right, so these are some examples of innovations in the banking and finance world when it came to inflation and recession. Okay, on behalf of V Electronics, this is Ubaid. Have yourself a great day.